Groundhog Day, that magical moment when we let a furry rodent play meteorologist. Today, February 2nd, 2026, Punxsutawney Phil emerged from his burrow at Gobbler's Knob and, drumroll, saw his shadow. According to the legend, that means 6 more weeks of winter. Brr, but hey, if Phil's accuracy rate is only about 35%, as per NOAA stats, maybe we should ask him about stock picks next. Speaking of shadows, let's dive into the stock market, where doubts are casting some of their own. Buckle up, this ride's informative with a side of fun. Kicking off with today's action, as of mid-morning trading on this chilly Monday, the markets are showing some early volatility, much like Phil dodging paparazzi. The Dow Jones is up a solid 0.8% at around 49,285, bucking the trend with strength in travel and semis. The S&P 500 is edging higher by 0.34% to 6,963. While the Nasdaq's up 0.38% at 23,550. But watch out, tech's feeling the pinch from AI spending jitters. Pre-market futures hinted at a mixed open, with Nasdaq dipping 0.48% early on, thanks to slumps in gold, silver, and Bitcoin. Oil's down over 5% to $61.89, natural gas tanked 20%, and Bitcoin's hovering below $79K after a rough ride. Top movers, SanDisk's soaring 13%, Carnival's cruising up 5.8%, but Disney's down 4.8% on earnings woes, and Robinhood's tumbling 7.7%. It's a whipsaw world out there, folks. Blame it on Trump's Fed chair pick, Kevin Warsh, easing some volatility fears but sparking a metals meltdown. Looking ahead this week, earnings season's in full swing. About 25% of the S&P 500 reports, so expect fireworks. Amazon's the headliner Thursday, fresh off announcing 16,000 more layoffs, efficiency or ouch. Palantir, Tyson, and Snowflake are also on deck, with AI deals and partnerships making waves. Economic calendar's light, but watch Treasury yields creeping up to 4.27% amid Fed uncertainty. Overall outlook, subdued gains possible if earnings beat, but volatility's lurking. VIX is down to 16.91, but tech's divergence and healthcare slumps could flip the script. Historically, February's flat for the S&P, so don't bet the farm on a rally. Think of it as Phil's shadow. It might linger, but spring or a rebound could surprise. Zooming out beyond this week, optimism's high. With GDP growth, rate cuts, and AI hype, EPS could grow 10% year over year. But shadows are lengthening. Markets might dip if macro challenges bite. Expect rotations in tech AI bubble fears, with 10-year yields holding 4.2 to 4.3%. North American equities hit highs but reversed, a sign of caution. And remember, what goes up? Well, Phil saw his shadow, so maybe brace for a chill. With tense mystery lighting. Now, the juicy part. Underreported factors that could sneak up like Phil's shadow. First, geopolitical drama. Trump's capture of Venezuela's Maduro has oil buzzing, but broader risks include U.S. rhetoric on Cuba, Iran, unrest, and NATO tensions over Greenland. Immigration policies are spooking foreign investors, tanking the dollar 3% recently. Add tariff shifts and populist caps on credit card rates. That's denting bank stocks already. Credit cracks. Auto loans souring, corporate defaults quietly elevated since 2023. JP Morgan's Jamie Dimon warns of more cockroaches. AI spending scrutiny. Tech giants' capex might not pay off, leading to reassessments. Soft consumer data could finally hit spending if jobs soften. That's 70% of GDP. Retail investor surge means sharper volatility, and 76% of investors fear a 2026 crash per surveys. Oh, and Minneapolis turmoil plus European pension funds pulling back. Under the radar, but potent. These aren't headline hogs, but they could cast long shadows on your portfolio. There you have it. From Phil's frosty forecast to market mysteries. Stay entertained. stay informed, and maybe hedge those shadows. Thanks for watching. Hit like if you're team early spring, and subscribe for more market magic. Until next time, may your stocks rise faster than Phil retreats.